What's going on, everybody? This is Lamar, and it is Monday at about 11:15 a.m. And today we're going to be doing a quick market review. I'm going to show you all the pairs that I think have good setups in them. We'll discuss some pairs that could potentially trick you into getting into a setup, but they are not ideal, especially when you have so many options on what to trade. But before we start that, I'm going to give you the tip of the week. The tip of the week is 30 to 40% annual gains year over year will lead you to be a very wealthy person. Do not focus on anything else that people are doing in the market. If somebody says they're making 2, 3, 400% gains and you should be too, you should ignore them, because distractions like that are going to hinder you from executing your system properly. When you have greed, when you feel greed, then you are going to fail. And so realizing that all you need to do is pull 30 to 40% out of the market to be financially successful, incredibly successful. Once you come to that realization, you will start to succeed. And the distractions hindered me for a very long time, because if my trading system was not producing income within 1 or 2 trading days, then I assumed I had a poor trading system. And that is not the case. Patience and consistency in your process, mastery of the execution of your process, that is what will lead you to financial independence, financial success in the markets. So stay focused and understand that this is all about the long game. And do not worry about what other people are doing. Only focus on ensuring you can retain 30 to 60 or 30 to 40% in the market. So without further ado, let's go to the intro. So we are going to jump into the pairs that have high probability setups that have presented themselves. Australian dollar, US dollar. This is a great break-in retest of H4, but the timing of it was it set up on Friday afternoon, and I don't take setups late in the afternoon on Friday. So we've set up on Friday afternoon. We've now moved away. We've missed this entry opportunity, and I really refuse to enter right here, because technically speaking, you have to have a stop. You should have a stop loss below some local swing low, which would be here, this series of higher lows. And so I'd really prefer a stop loss at this level. But my initial target is at weekly. And so the 1-to-1 risk reward going up to weekly, going up to target 1, is survivable, because that is only target 1. If we hit weekly with the momentum of this market, it could easily breach that level. But I would prefer if I could pull out a 1.75 to 2R going to target number 1. That would be absolutely preferable. So the market has not given me a great entry position where I can have a proper risk reward ratio. And if that entry would be down somewhere in this range, which would mean I need another retest of this level, perhaps like some sort, I know this Elliott wave, but ABC correction pattern, move up. That would be much more preferable to trigger an entry. This is the reason I am not jumping into this trade. I'm not going to chase it. Although it's a great setup, I cannot chase it, because I do need a technical stop loss placement, at least a reasonable stop loss placement. And if the market were to come down into the zone and I had my stop loss here, I would not have been invalidated, yet I would have been stopped out of the trade. And so that's something you have to understand as you're trying to place stop levels and at points of invalidation of your thesis. And if you're getting stopped out, but your thesis is still valid, then you are not placing proper stop losses. And so this would be the ideal stop loss placement for me, below monthly, below the zone, which is a weekly. This red is a weekly resistance zone. This white area is my H4 resistance. And so this is preferable for me. I'm going to be patient. I know that I will have ample opportunity over the 365-day period. I'm going to have a lot of trades that don't provide me optimal entries, and I need to just move on. I've got 35 pairs on this list, which I finally counted, how many pairs I have. 35 pairs on this list. So I have plenty of things I can trade. So waiting for this setup, I've got an alert. I suggest you utilize heavily these alerts in TradingView. They will keep you, they will present opportunities to you that you don't have to consistently monitor throughout the day. So Swiss franc JPY, this looked like a great setup, although our closes right here aren't preferable at this point in time. In a clear uptrend, we've breached this H4 and weekly level. We've retested, and I'm actually going to still be looking for long, as the arrow shows you. If we can get a solid bullish engulfing or some very bullish candle move back above this H4 level and retest it and then start to bounce, I will look for an entry. And preferably my stops are going to be below weekly, below monthly open, below these local lows. That would be preferable. And because targets are pretty far away, we've got a good distance to targets at monthly, which 2.91 if I can get an entry around here. Not guaranteed an entry at that level. It could be a higher entry. But if I could at least obtain a 1 to 2 risk reward ratio going and targeting that monthly, that would be preferable. But I have to wait for the market to show signs of strength. And right now it is closing into this H4 level. It's not showing that. So we need a reclaim and a retest, really reclaiming this local low. If you can see this thing I'm circling right here, that would be preferable. So waiting for this setup patiently on Swiss franc JPY. Great British Pound, United States dollar has cleared a crucial H4 and weekly level after consolidating, I think a multi-day consolidation under the level, like a 1.5, 2-day consolidation. So very good breach above. Now we just want that pullback into the range before we enter. And if we enter a trade like this, I'm not going to have stops all the way down below these swing lows. I'm probably just going to have a stop right below that most recent market structure low, which is right here. And the reason I'm going to place it there is because I have a lot of logic behind the defense, the price getting defended above that point. I got a weekly level. I have the whole H4 zone. I have daily open and weekly open, and I've got these local highs. So I've got a reason that the market could bounce and could actually hold us above this level. But that's probably where I will place my stops so that I can obtain an optimal risk reward ratio. But the market may never make it there, and that's okay. If it doesn't, I will just be patient the remainder of the week until I get a great setup. So waiting for a pullback. My alert is already set. Clear uptrend right here. New Zealand dollar CAD. Potential setup about to play out, but if we can get a break above this level and a retest, then we will continue this uptrend, which we're so clearly in. This is a very nice H4 level. It's tight, but I want to see a breach of that local high. I need that local high to be breached to continue market structure. Market structure being higher highs and higher lows. And so I need to breach this local high. If we don't, then there is no setup. It actually does look like it's kind of gonna, it also has the potential to roll over and push to the downside. But that's why we're being patient. We're not gonna jump in a trade early out of anxiousness, out of desire to trade. I'd have no desire to trade. I only have a desire to trade if the market presents me with a high probability setup. Outside of that, I think there's a couple other pairs that I failed to mark, but yeah, so those are the best 4 trades that I saw when scanning through 35 pairs. There are other trades that are good in structure but bad in positioning. So I just wanted to give an example of that. New Zealand dollar versus the US dollar. If we can breach above this high, which you can see we're testing right now, and retest this level as support, then you've got a potential long. But the problem with the long is it's straight into monthly. And so the logic behind any of this is it smart to long into monthly? Is it smart to short into monthly support? So is it smart to long into resistance and short into support? No, it's not. So as anxious as you could be, as great of structure as this has, I don't suggest doing it. I don't see the probabilities increasing based on that location of price. That price positioning is crucial in regards to increase or playing with good probabilities. What I really wanted in this market on NZD US dollar was a pullback to this level, which we never got, and prices continued to move away. And that's okay. Once again, you cannot chase an entry, because if you chase an entry, it's at the detriment of your risk reward ratio. And the higher the risk reward ratios you can land, the less you have to be right. Obviously, the more profit you're going to pull out of the market on the trades that succeed, but your probabilities being in your favor and your risk reward ratio being in your favor almost lock in the fact that you're going to be a profitable trader. So trying to keep those two in alignment versus just saying, oh, I think I picked really good setups, so I can skew my risk reward and I can take poor risk reward ratio setups. I don't think that's going to help you in the long term. What would be a good pair for, and that is not good. Okay, so this is an example of a trade that you could take, people will take for certain, but I'm not necessarily interested in. We do have the formation of a bearish market structure, but there's so much structure to the right here, and this is what I try to avoid in my trading. Is when I look to the recent left on my 4-hour chart, on my 1-hour chart, if I've got structure that could generate a bounce here, it 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 could generate a bounce at so many different places. This is more so price coming back into a range than it is in a free fall market structure. So this is a range without a doubt. Price has ranging anytime it comes back into this zone. Let me make that even more clear. This right here is a range, and we're going to do channel 50%. Here is your range. So price clears the range and then fails to break out, and now it looks like it's falling right back into the range. I don't short ranges. I short downtrends. I don't long ranges. I long uptrends. And so this decreases the probability of continuation when you are looking at market structure that's immediately to the left of your entry. So I've got so many places the market can bounce right here. I'm going to probably skip this short. I'm going to skip this short. So that's just an example of what I look for. I'm looking for structure to the left, and you'll see all the pairs that we went through. Do you see structure to the left? No. Structure is down here, and we are clearing, making new highs. Very bullish. Do you see structure to the left that's hindering our move up? No. Structure's down here. We're making new highs. Do you see structure to the left? No. We've cleared the highs, and we're looking for a retest. We're making new highs. Same here. NZD CAD. Do you see structure to the left? And so this is the difference between so many setups, what we're looking for versus what other people are willing to take. Do not be willing to take mediocre setups unless you have a proven, mathematically proven, and significantly backtested with large sets of data. If you have proven those statistics over time, then you can confidently take those setups. But until you know for a fact that your probabilities are in your favor, then you shouldn't be taking trades. That is the extent of the market review. Everything else in the market, we're like the Euro JPY. We're waiting for new highs to be made. We're waiting to breach those points of interest so that we can look for a retest of key supports or of key resistances. I will provide an update in the middle of the week, and if anything develops, such as this Euro JPY trade, then I will surely be posting about the potential setups. So y'all have a great week. Good luck with your trading. And remember, 30 to 40% gains on an annual basis will make you an extremely wealthy person.